All right, what's going on, Premium? Welcome back. Today we're going to talk about draws on liquidity. The first thing I want to talk about is differentiating draws on liquidity from daily bias. Okay, so a lot of people seem to have this issue where they get the two mixed up. Every single morning, I post what I want to see daily bias wise in my daily bias tab of the Discord, and I say, okay, I'm bullish for today. Then I will list like, okay, there's a 30-minute bullish gap here. There's ES going for London highs. There's 15-minute gaps to inverse. So the bias is the bullish or bearish itself, the first sentence. And the draws are liquidity pools that I list off that I want to get hit. So that's the difference. Draws are actual liquidity pools. So if we go in the higher time frame here, right? Obviously, what did I say? I was bearish? I said I was bearish today, which probably didn't end up working out. There is this unfilled daily fair value gap on the daily chart, and then there's this daily low that we have yet to hit. So you want to mark out key liquidity pools on each on every single time frame, on the higher time frame, that could be hit off bearish or bullish reactions. What do I mean by that? Well, we have this daily fair value gap above, so if we end up being bullish, I want to see price come to this daily fair value gap. However, if we end up being bearish, I want to see price go to this daily low. We go to the hourly time frame, it's the same exact thing. Okay, we have this hourly fair value gap right here. I want to see us potentially get a reaction off this and then push up to these higher gaps, or maybe we start inversing this and we start pushing to the downside. There are also highs here we could sweep out like this high and this intermediate high that are very, very valuable as well. So what happens at open? We tap. I believe this was the trade I took, like the what's it called, the long or whatever, the 15-second. Yeah, so I ended up taking this even though it was against my bias. Why is that? Well, let's talk about this. First of all, yes, this trade was so goated. You don't even have to tell me. I already know. I think it was something like this. So let's talk about it. I was bearish, but I took a long. Why? Because marrying your bias will get you fucked. I said there is an hourly fair value gap below here, and that is a draw on liquidity for me. I think price tends to want to go for what? Highs, lows, and unfilled fair value gaps. That's just how it is. Price goes from internal to external liquidity and vice versa. We want to go from highs to fair value gaps. We want to go from lows to fair value gaps. We want to go from fair value gaps to highs and lows. What else do I really like? I also love highs that are intermediate, which means that they are inside of fair value gaps. So this high and this high would be examples of highs inside fair value gaps, because as you can see, we have this big 1 hour, and I believe, nope, not a 4 hour, just a 4 hour unfilled gap, but they are hourly intermediate highs. They are highs inside of fair value gaps. So those are very, very valuable. Like just like this London low and these lows are lows inside. You usually only want to see one, like just this guy, whereas this guy's not really in the gap. It's just where the gap was formed, unless you want to go a little lower here. So I want to see more like just one high, so even this isn't the best. But, okay, my bias was bearish, but I took a long because I said, listen, I want to be reactionary to every possible thing that happens. Remember I said would love manipulation to that gap at open, the 4 hour bearish gap, like this one right here. So I wanted to see us tap into this one. Let's see. Edge those daily lows are approaching a 4 hour bearish gap. So I always want to see manipulation, because manipulation really happens at open, because at open a new 15-minute, 5-minute, and 30-minute candle are opened up. So if you go to the 30-minute candle here, this is the 9:30 30-minute candle. We made our bottom wick, touched into an unfilled hourly fair value gap, and then shot up. All right, so what that shows me, first of all, oh my god, I forgot how good this trade was. AMD to the fucking T right here. But I said, listen, if we are going to be bullish, I want to see this 4 hour get hit, and I want to see this high inside this 4 hour get hit, because those are strong draws on liquidity. What does that mean? Draws on liquidity. You keep saying that. What is that buzzword? It means that if we were to follow in the direction of where those things are, or if we were to be bullish just in general, Why are we bullish? What is the narrative? Because remember, every time you take a trade, there has to be a story behind it. So when I predict shit pre-market in my daily bias tab, it's because I'm envisioning things that are happening. I'm envisioning a story based on certain reactions that could happen at open. Because I can't predict what the market is going to do, ever. But I can predict how I will react based off what it gives me. So if I'm going to be bullish, or if I'm going to get long setups, I'm thinking, why? Why would I want to be bullish? Like, what would we go to? Well, there's an unfilled 4-hour gap right here, and there's a 1-hour high inside of this for value gap, both of which are beautiful draws. So what am I going to do? I'm going to target those draws. Here, the 4-hour gap gets hit, and then here, in a second, the intermediate gets hit. So absolutely beautiful, right? But let's also talk about this. Okay, our draws on liquidity have been hit for longs, for bullish longs, right? We hit the unfilled 4-hour, and like I said, great draws on liquidity are unfilled gaps, highs, lows, intermediate highs and lows. Those are what you're looking for. And just real quick, I do want to recommend some videos. So Dodgy, who popularized IFVGs, made a video called The Most Simplified ICT Draw on Liquidity You Will Ever Watch. That's a really good video. And then PV Blake, who I took a lot of inspiration from. This wasn't it, but this probably would work. I know him and they did like a thing on Daily Bias, so I would watch their Daily Bias video, and then I would watch this leak from their premium right here, how to find Daily Bias and draw on liquidity. Only 15 minutes, but makes it super helpful on how to differentiate, so those are some videos I would recommend. But remember, draws on liquidity are, okay, if we are getting longs or if we are getting shorts, why? What's the narrative behind it? What are we pushing towards? Now that we've hit the narrative, or what we're pushing towards, what happens? Well, okay, now we're reacting off of it, and we're getting an inversion off of it, and now all of a sudden, what can you do? Well, you could start taking shorts. Look at that. You just ping-ponged NQ like it was fucking nothing. And then you could say, okay, well, what are our draws to the downside, right? What do we want to hit? Well, we have London low down here. We have, this swing low. Do we have any unfilled gaps? Well, we have this unfilled 4-hour gap that opened up at 10 a.m. So maybe we'll want to go for that, right? Will we go for that every time? Fucking probably not. Let's see. I bet we don't. Yeah. So, whatever. End of the day, I mean, shit, this would have been a beautiful trade. But draws on liquidity work as targets and reasons for taking a trade. You will take a trade because we're reacting off something and because there's something above to confirm that reaction. So if we were to go the other way with it, like I said, with that short we just took, why did we take this short? Well, because we hit a 4-hour intermediate high, like I said, or a 1-hour intermediate high, sorry, with this high right here. I'll draw this over here. And we hit an unfilled 4-hour gap. So we've hit bearish PD arrays or bearish liquidity pools. So now we have a reason to go short. We're reacting off something. If you think back to my checklist when I take a trade, I want to get a higher time frame narrative. Oh, fuck. Now, let's think. Remember what our draws on liquidity are. Well, I want to see unfilled for value gaps get hit, and I want to see highs and lows get hit. Well, what do we make on this move up? Well, we make an unfilled 5-minute for value gap. So what do you know? This is our liquidity pool. Bam. Our draws have been hit for longs, and then, like I said, I already showed you guys this short, but now it reverses the other way. Okay, now we can look short. Now, I need draws on liquidity that are bearish, aka if I'm going to be bearish and I'm getting a setup that's bearish, I want to find a liquidity pool that would confirm bearish price action, or is telling me, okay, if shorts happen, they're happening because we left this 5-minute or we have this low or something like that and we want to go to it. So here's this unfilled 5. What happens? We hit it perfectly. And then what happens after we hit the 5? Well, we start shopping and then we start making moves back to the upside because that was our draw on liquidity. Those unfilled gaps are beautiful for draws on liquidity. Like, even here, I wonder if you would have gotten a long off that on the lower time frame. I don't really know. But this long off a 30-minute or off an hourly gap, and this short off an intermediate high and a 4-hour gap, are both targeting similar shit. They're targeting highs or they're targeting gaps. We were targeting the unfilled 4-hour and the intermediate high, and we were targeting the unfilled gap. Draws on liquidity are simply just why am I taking this trade? What am I aiming for in this trade? Why do I think this trade is going to work? Yeah, whatever, there's a checklist. You go to my checklist and you say, okay, bro, we're rejecting out of a 4-hour. Yeah, we have an SMT, we have an IFEG. That's all good and well, but let's take this high, for example. Hey, bro, this is an hourly high. Why did we keep going up to this high? Like, why didn't we just reject off this and then get shorts to the downside here? Well, it's pretty simple. We didn't open up any gaps. We didn't make any lows or prominent highs or lows to target. And we still had this high and this fair value gap above. The draws on liquidity are always going to be looked at as, okay, important liquidity pools that we are making a move towards. There's a reason why we're making a move towards them. So why did we not react off this high? Because we were bullish for a better draw. Just better liquidity pools were above that we could target. And then when we get the shorts, okay, bro, like you took your short right here. Why didn't you just take it to these lows right here? Well, because I wanted this unfilled 5 to get hit right here, and it did. So that's how it works. Draws on liquidity are so fucking important. Literally, like, the basis of trading, to be honest. Like, there are people who don't even enter off IFEGs or entry models or anything like that. They just, at the beginning of the day, will analyze the charts, wait for a reaction, and then say, okay, we're doing this, and we're going to draw to this. And then they'll leave a runner, or they'll leave their trades going for hundreds of points because they believe we are bullish, so we're going to run up to this gap above, or we're bearish, so we're going to run and take out these lows below. The targets for your trade are what build a narrative and give you the confidence to enter a trade and the actual valid reasoning behind it. So that's how draws work. Very effective. I try to give you guys good draws in the morning every single day. I really, really recommend if you're struggling with draws to check out my daily buys every single morning. All right, see you.